Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in China. Now, if you follow the channel, you'll be fully aware that Donald Trump has imposed two sets of additional tariffs on China since he took over as president. The first of those were at the beginning of February when he applied an additional 10%, and then at the start of March, he's applied another 10%. So over the course of the past 5 or 6 weeks, an additional 20% in tariffs have been applied against all imports into the USA from China. And in terms of the significance of those tariffs on the Chinese economy, you can see from this graphic that the United States is the single biggest export market for China, representing 15% of all of its exports, which equates to more than $500 billion in monetary terms. And in terms of the impact on China's GDP, trade accounts for more than 37% of GDP, the biggest single contributing factor. And the figures for imports and exports for January and February have now been released, and they show that imports fell by 8.4%, which was the worst performance for 19 months. And exports also came in at less than half of the expected growth. China only achieved 2.3% growth compared with the 5% that the markets were forecasting. And it's interesting that the figures that have been published for February are actually an amalgamation of the January and February results. Now, the reason why China has done that, the official reason, is because the Chinese New Year came across the end of January and into February. And so the Chinese authorities have said that they've amalgamated the two to give it more of a balanced viewpoint. But I think it'd be really interesting to see what the drop-off had been in February since the new tariffs were announced by Donald Trump. So let's have a look at what's been happening with imports. This chart shows the year-on-year movement in the value of imports into China. And the reason why imports are an important measure when we're looking at the Chinese economy is because China imports a lot of raw materials and fuels which it needs to use in its manufacturing processes. So the value of the imports gives us a really good indication as to what's likely to happen in terms of exports over the course of the next few months. Now, as I've just mentioned, the latest figures that have been published by the Chinese authorities are an amalgamation of January and February. So that's why there's a gap on this bar chart in January. And what you can see from the February figures is that year-on-year imports are down by 8.4%. And if we widen the scale of this chart to show the last 3 years, you can see that the latest figures are the worst that China have posted since July 2023. And if you look at the trend as to what's been happening over the past 6 months, you can see that there is now a clear downward momentum in terms of the year-on-year movement in imports. And this tells us that Chinese businesses are struggling right now. They are reducing the amount of raw materials that they're buying. So that tells us that they're not producing as much, they're not exporting as much, they're not selling as much, and therefore they won't be making as much profit, and therefore they won't be contributing to the Chinese economy. And overall, this chart shows us that the Chinese economy was already struggling, and this is before the full impact of the new tariffs that Donald Trump has announced have really kicked in. This chart shows the year-on-year movement in the value of China's exports over the past 12 months. And once again, here we've got an amalgamated figure for January and February. And what that figure shows is that year-on-year exports increased by 2.3%. And you might be thinking, well, 2.3%, that doesn't seem like a disastrous result. But when you consider that the Chinese authorities have set a target growth rate for the whole of the Chinese economy of 5%, and trade is one of the biggest drivers of GDP, it really needs trade to be coming in at least 5% growth. So 2.3% is significantly short of that, and it's also short of what the expectation was from the market of 5%. And what you can see from this chart is that the latest result is the worst that China has posted since April 24 and compares to growth of 5.6% in February of last year. So the Chinese economy has made a very bad start to the new financial year, and that means that it needs to see significant growth in the following 10 months in order to be able to achieve that 5% growth target for the full year. However, as we've just discussed, because Donald Trump has imposed these additional tariffs, that's going to increase the price of all of those Chinese exports in the USA, which is its single biggest market, and that's going to make it very difficult for the Chinese economy to be able to have a strong rest of the year. Now, one of the interesting debates that's going on at the moment is what's going to happen to the value of the Chinese yuan. Because if the yuan was suddenly to deteriorate in value, if we saw a 20% fall in the value of the yuan, for example, that would actually offset the additional 20% tariffs. Because if the price of all of those imports into the USA falls by 20% as a result of an exchange rate movement, then it would negate the 20% increase in tariffs and therefore mean that Chinese products would be selling at the same price in the USA. And this is a concern that's rising now in America, that the Chinese authorities could actually devalue the yuan to offset these additional trade impacts. This chart shows the movement in the exchange rate between the US dollar and the Chinese yuan over the past 12 months. And if we focus in on what's been happening in 2025, you can see that at the start of the year, one US dollar was trading for 7.36 Chinese yuan. Today, it's trading for 7.24, which represents a fall in value of the yuan of around 1.6%, so nowhere near the 20% that we've just discussed. And if the yuan was to fall in value by 20%, that would mean that one US dollar would be trading for around 5.9 Chinese yuan. And if we widen the scale of this chart to show what's been happening over the past 5 years, you can see that the lowest point that the yuan has traded at was in February 2022, interestingly, at the start of the war in Ukraine. And at that point, one US dollar was trading for 6.3 yuan. So 5.9 would represent the worst exchange rate that China has seen at any point in the past 5 years. And it will be interesting to see what happens with the exchange rate of the yuan, whether or not it just continues to fluctuate as it has done over the past couple of years, or if we start to see a significant reduction in the value as a result of those tariffs that have been applied in its biggest single export market. And as we just discussed, if that does happen, it will make Chinese imports into the USA relatively less expensive, because as the value of the yuan falls, so does the US dollar equivalent price of those imports in the USA. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening with China's trade is absolutely fascinating, but also really critical to what's going to happen to the Chinese economy in 2025. As we discussed at the start of today's video, trade accounts for more than 37% of China's total GDP. That's basically what the Chinese economy is. It makes things and exports them all around the world. And its biggest single market, representing 15%, is the USA. And as you know, Donald Trump has hit the Chinese imports with 2 sets of tariffs already, and we've now got an additional tariff of 20% against all imports into the US. And those tariffs are going to have a really negative impact on China's sales, because all of those products are now relatively more expensive. So US consumers and US businesses are likely to look to alternatives, because the Chinese product is no longer the cheapest on the shelves, or even if it is the cheapest, it's not as cheap as it was previously. So this is a real disaster for a lot of these Chinese businesses. And what we've seen is that already it's starting to impact on the trade results. We saw a fall in export growth to 2.3%, which was less than half of what everybody was expecting, and significantly below that 5% figure that's been set by the Chinese authorities for total increase in GDP in 2025. But we also saw that imports were down by 8.4%, the worst result for 19 months. And what that tells us is that Chinese businesses aren't importing as much in terms of raw materials. They're not prepping up for a big push in exports. And so it's likely that over the next few months, we will see a continuation of the decline in export growth. And actually, exports could actually move into negative territory as a result of those tariffs, because the figures we've looked at in today's video covered January and February. Now, obviously, January was unaffected by those additional tariffs because Donald Trump wasn't actually in power then. The first set of tariffs came in right at the beginning of February, so there has been some impact in the February results. But the second set of tariffs didn't come in until the start of March, so they actually haven't had any impact yet. So when we see the full impact feeding through into individual months, when we get the figures for March and April and May and June and July, we are likely to see those figures being severely impacted by the additional cost to all of the Chinese exports in the USA. So this is really just the start of things to come, and it's likely that over the next 6 months we will see Chinese trade struggling, and that's going to make it extremely difficult for the Chinese economy to be able to hit that 5% growth for 2025. Now, obviously, what we're looking at here is an impact of these tariffs, and that's going to impact on a lot of economies, including the USA, because as we've discussed, the USA will see an increase in its prices, therefore inflation will go up. That's going to impact on consumers. They may spend less, so we'll see a slowdown in GDP growth and spending, and we could also see interest rate increases happening in the USA. But what we've also talked about in recent videos is the fact that China has now retaliated against the USA. It's imposed additional tariffs of 10 and 15% on a lot of agricultural imports that are coming from the USA. I made a video recently talking about the fact that the US is the biggest single provider of chicken feet and pig's ears because they're seen as a delicacy. In China, they're not actually used at all. In the USA, they're basically scrap product. And so the price increases that are going to feed through in the Chinese economy are also likely to have a negative impact on the internal growth within China, because that means there'll be more inflation. Consumers might have to spend less, or they might decide that they don't want to spend as much at the stores. And so we could see a slowdown in consumer spending, internal growth, and that will also drag down GDP. So the overall summary of today's video is the trade figures that we've seen for January and February show that the Chinese economy is already slowing down. There is a huge fall in imports in the first 2 months. We've also seen exports coming in at less than half of the expected growth, and the additional tariffs that have been applied by the USA against China are going to hurt those trade figures even more over the next few months. It's likely we'll see worse results in March, April, May and June, and all of that represents seriously bad news for China and its expected growth of 5% in 2025. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and thank you so much to everyone that's supporting the channel. If you've bought me a coffee, thank you so much, really appreciate that. If you've bought me a YouTube super thanks, I really appreciate that too, superb. And if you've signed up as a member or a patron, thank you for that long-term support. I don't say it enough, but it really does help to keep me motivated, helps keep me focused, and helps to keep me posting as many videos as I can. So thank you to everybody, and here's something to put a smile on your face.